Hello there today, viewers. On behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for May 10th, 2013. Let's take a look at the CME dairy components at the conclusion of Friday's trade. In cash cheese, blocks settled at 184.5, down 6.5 cents. Barrels settled at 172.25, down 3/4 of a cent. In cash butter, settled at 161 even, down 4 cents. May whey settled at 58, up 1/4 cent, and May non-fat dry milk settled at 164.70, up 1.45 cents. Looking at Class 3 futures, May settled at 18.55, down 15 cents. June settled at 18.08, down 83 cents on the week. July settled at 18.74, down 40 cents. And that puts the 2013 average at 18.21, losing 18 cents on the week. The cash cheese sessions this week were a lot quieter than what we've seen over the past couple of weeks. Sellers were a lot more eager to unload blocks and barrels than buyers were to purchase them. In today's session, just one block traded hands, but both blocks and barrels were offered. No buyers are willing to step in on the barrels today. Again, the black barrel average settled down 3 5/8 cents this week at 178 3/8. Now, CME cheddar is still trading at a significant discount to global dairy prices, and cheese exports have been increasing. This should be supportive going forward. We saw further weakness on the second month chart this week. Here we have a weekly chart of June milk. Now, June sold off 83 cents just this week, and that's the third week in a row that we've seen June sell off like this. Now, it is common to seasonally sell off in the beginning of May like this, but the real question is this a seasonal move lower, or are we going to keep going lower in the long term? In order for us to see some seasonal upside, we're going to have to see milk change directions next week, or the risk for a counter-seasonal move lower would be greatly increased. Weekly dairy cow slaughter came in at 59,900 head for the latest week reported. That's the first time that slaughter rates have broken below the 60,000 head mark since the first week of 2013. Now, seasonally speaking, we should continue to see some declines until about the middle of July, which is this point right here, when we tend to put in a seasonal low and start to work higher. So it's not uncommon to see slaughter rates drop off like this. However, on a year-over-year standpoint, 2013 slaughter rates are still tracking about 5% ahead of 2012. Total dairy exports increased 12% in March over February. That's the second highest volume that we've seen exported since we put in a record high back in 2012. One of the leaders in exports in the month of March was cheddar cheese. Now, cheese exports increased 20% in March over February, and that translates into a 5% increase year over year. With the increase in cheese exports that we saw in March, it put the U.S. cheese trade balance back to more of a normal spread that's more typical of cheese imports and exports than from where we were back in the end of 2012 when we were actually a net importer of cheese. We've continued to widen that spread here as we go into 2013. Looking at the week ahead, it's a pretty quiet week as far as reports go. We just have a dairy product sales report out on Wednesday, and a weekly slaughter numbers will be out on Thursday. So that'll do it for us here today. On behalf of the Market 360 advisors at Stewart Peterson, thank you for watching and have a great weekend.